Hi, Uwe Jacobs, property strategist from Property Friends here. Welcome. I'm bringing you the update for the month of, what is it? April. Geez, time is flying when you're having fun, isn't it? Including the RBA rate decision. So we're going to have a look at the property investment market and what's hot, what's not, and what's moving and shaking. There's no doubt in my mind, and it's not just my mind, it's the mind of many experts, that the major cities have all slowed down substantially. The only exception is at the moment Adelaide, and that's peaking. There's no question about that as well. So to do property investment in a meaningful way with balance between capital growth and rental yield, so that the property doesn't eat you out of house and home, we got to go into major country towns. And my favorite is still Cairns and Townsville. Many reasons for that. The majority or the biggest reasons are they're both cities over 175,000 people, so very much substantial country centers. Great rental yield, good capital growth, low rental vacancy, good population growth with quite a bit of investment projects. That means great employment. What's there not to like? And just on the note of Cairns, I hear a lot of people that tell me, well, that's a tourist town. Well, not much anymore, not so much anymore. That really changed during COVID when Cairns needed to find a new orientation and bolster up its other income sources. So, question, did you know that Cairns' three major income sources are now government-backed? The university, the hospital, and defense is getting very much stronger and stronger. Look out for the expansion of the Navy base. Again, no rocket science. Any perceived threat is going to come from north, and it makes sense to expand our capabilities in the north. That also very much applies to Townsville. So all good indicators for a fantastic market to invest in. And by the way, I'll let you know I'm going up to Cairns again end of this month. We'll do some live updates, so be on the lookout for that. That will be very interesting. I'm really looking forward to being on site again, which is the difference between the theory and the practice. Being on site, as I call it, smell it, touch it, feel it, so to speak, is always different, than just going by the theoretical figures that are being portrayed. Because a lot of the figures depends what stats you pull up. I jokingly say I don't believe any statistic unless I've fiddled with it myself. So, anyway, that's why it's important to be on site, on location, and to really check up what is the market doing on hand and build your own opinion on that. Okay, now to the RBA rate. No big surprise. The RBA remains unchanged at 4.35. There was some jitters in the market that there may be a rate increase. I was hoping, praying, and keeping all fingers and toes crossed that it would not eventuate, and it did not eventuate. Quite frankly, I think you would send Australia into a very difficult territory, and I'm not going to use the depression word. People are doing it tough. More and more people are coming out of fixed rate interest. So the CPI is going to come down. The rate reductions that some people are expecting are being pushed out now to November and December. Let's see. My suggestion is it'll be the last RBA rate decision of this year, where we hopefully get some relief. So all in all, stable interest rates, some really good areas to invest in. And as I always say, it's the deal. If the deal is good enough, then the investment is a good investment. So the point is, we have to find the deal that's good enough. So feel free to that end to go our website, and if you want to have a chat, book a discovery call. No charge, no obligation. What have you got to lose? And remember, you got to be in it to win it. Have a good one.